Budget. This is a topic from Section 5, Finance and Accounting. And during this session, we should be able to identify the factors that contribute towards the significance of budgeting. And of course, when you're attempting questions, especially the case studies, you'll be able to refer to these points and evaluate a situation, analyze a situation in a more focused way. Okay, so budget is simply an estimate of income and expenditure over a set period of time. A simple definition: estimate of income and expenditure. And budgeting is something that is observed, or something which is, we can say, exercised at every possible level. Individuals, they prepare their budgets to manage expenses and all. Families, households, they have a budget, that this is the amount of money that'll be available to us, and this is how we are going to allocate funds, or this is how we're going to spend it. Similarly, all business organizations, it's unimaginable for a business to survive without having prepared a budget first. And so much so that countries, every year there's a speech, a budgetary speech. Every country, every government has to prepare a budget on a yearly basis, so that they're able to identify the sources that can be used for raising funds and how that amount is going to be spent. So basically, a budget tells us about how a certain amount of money is going to be raised, and also this is how it is supposed to be spent over a given period of time, right? And there are certain students who are confused about a cash flow forecast and a budget. No major difference, except for the fact that a budget is usually prepared for a 12-month period, right? A cash flow forecast, on the other hand, this is something that can be broken down on a monthly basis also, right? Okay, so you have to keep in mind that the following four factors play a vital role when it comes to the significance of budgeting, or how a business organization can rely on these figures when they are preparing a strategy, formulating a strategy, with reference to any venture or any project that they plan to launch in the future. So the first factor, or you can say the first advantage of budgeting, or the first factor that adds to the significance of budgeting, that is an enhanced managerial perspective. An enhanced managerial perspective, right? This basically suggests that a manager who's in the habit of preparing budgets, a manager who's more systematic, and he would keep his ears and eyes open, and he plans everything properly, such a manager usually has an enhanced perspective, which means that such a manager takes better decisions. Or you can say, such a manager, he would view a situation from a wider angle. He will view every situation from a wider angle, and he will take into account all the factors, favorable or adverse factors, that can influence the performance of a business in the future. So the first advantage associated with budgeting is that it gives managers, or the management, an enhanced managerial perspective. You can say such a manager, his decisions are based on complete information, or sufficient amount of information, right? So he takes better decisions because he has taken into consideration all the relevant factors. So that's number one. The second factor to be highlighted, to be discussed with reference to budgeting, is that it gives us an advanced warning of problems. Advanced warning of problems. Since a budget is a plan for the future, this is an estimate, like I mentioned in the beginning, that highlights the anticipated expenses and income. So it will give us not only an enhanced managerial perspective, but also an advanced warning of problems, because you can foresee and you can identify factors that can possibly create problems for the business in the months and years to come. For example, if somebody is preparing a budget, and he realizes, as a result of all that calculation and playing with all those figures, that in the month of September maybe I foresee a cash flow crisis, right? So that means he has received that information, and he can come up with a timely solution to that problem. And of course, gives you a warning of problems that might arise in the future. So you'll be well prepared. There won't be any unpleasant surprises for you. So if there's anything pertaining to management of funds or raising funds or managing a cash flow crisis, you'll be in a position to handle it better in a more streamlined way, since you have prepared a budget and you can foresee and you can identify, you know, how the situation in the coming years and months, how it's going to change and how it's going to influence your activities, and you'll be well prepared. So that's number two. Number three is coordination of activities. When a budgetary meeting takes place, so all the departmental heads are there, usually, the chief executive is there. So there's a better coordination of activities between departments and departmental heads. They will exchange views, all the relevant issues will be addressed, and if there are some controversial issues, those could be taken care of, in a systematic way. So better coordination of activities is guaranteed if, a business or the management, they're in the habit of preparing budgets. Coordination of activities, you can overcome conflicts or clashes. The head of the organization can justify his allocation of resources because everyone is participating in that discussion. For instance, if the chief executive has decided that this year, more funds are going to be allocated, for one particular activity or department. For instance, we are going to give more to the production department this year because a new product is going to be launched. So this will be discussed in the presence of all the other departmental heads. So you can justify your allocation of resources, and if you are, allocating funds, keeping in mind that objective, then everyone will be on board and there'll be no conflicts and people would understand why a certain decision has been taken. So better coordination of activities and fewer chances of conflicts and clashes. And lastly, it is evaluation of performance. Evaluation of performance. Keep in mind that a budget can be used as a gauge to measure the performance of a business. A budget can be used as a scale or a gauge to measure the performance of an individual, the performance of a department, the performance of the entire organization, right? When we say it can be used as a gauge, it simply means that whenever, somebody assigns a task to his workers, to his project team, for instance, they draw those lines also, they identify or they define the financial parameters also, that this is the task that we want you to accomplish, this is the project that you need to work on, and this is the amount of money that will be available, right? So the financial boundaries, the financial parameters, they are identified, they are drawn as well. So afterwards, if somebody overspends, he can be penalized for it. If somebody acts in a more cost-effective way and he works within those parameters and he saves money for the organization, for the company, maybe he can be rewarded for that. So basically, the budget can be used as a means of assessing the performance of workers, evaluating their performance, and like I said, as a gauge to measure the success or the ability to cope up with a given situation, the ability to be cost effective, the ability to be more, useful or beneficial, for the organization or the department that they represent. Evaluation of performance. So basically, more or less, these four factors: enhanced managerial perspective, advanced warning of problems, coordination of activities, and evaluation performance. These four factors must be highlighted, must be explained properly whenever you're discussing a budget-related question. But we must also keep in mind that managers, they should be mentally prepared for variances. You prepare a budget for the let's suppose it's for a 12-month period. So there's always a possibility that the actual figures or the actual results, they're somewhat different as compared to the estimates. There will always be some variation. We call it variance. Variance basically is a deviation from a standardized path. A deviation, the deviation could be in the favor of the organization, it could be in their interest, possibly it could be an adverse variance also. But any deviation, from a set path, that's called variance. Basically, variance is the difference between the budgeted and actual figures. For instance, if the budgeted quantity was 100,000 units, this was the estimate that we should be able to produce 100,000 units in the next 1 year, but they managed 85,000 units only. So this difference of 15,000 between the budgeted and the actual figures, this is the variance. In this case, it's an adverse variance because you're producing less than what you wanted to. But had this been cost, that if you're spending less than what you wanted to, then obviously that will be a favorable variance, right? So we should all keep in mind that budget, yes, it's an estimate for the anticipated expenses and income, but there will always be some variation because future is uncertain, and we should be mentally prepared for that deviation or for that variance. All right, so that's budgeting for you. Allah Hafiz.